Hey guys, it's the GammaEdge here coming at you with a pre-market prep plan for May 9th, 2025. So every morning in the Discord, we go through our effectively what is the market turning framework, which essentially we're just understanding momentum of the trend and we're understanding position in the options market. We have this article right here. It's on our blog, which outlines our pre-market routine. So if you're not familiar with that, you can give it a read. So starting out with the market trend model, from a short-term point of view, very blah action so far, which, as we wrote, is not the worst thing to see. Reason for that is, we've had a nice move the last couple of weeks. So this consolidation period makes sense, right? A sprinter just can't sprint forever. There needs to be a little bit of recovery phase before we make the next move higher. From a longer term point of view, we are seeing an expansion higher in the long term moving average driven, so that is also constructive to see. So net, this is more of a bullish picture than not. From a short term point of view, we want to see this sideways to higher action continue. If we do see a waterfall and a break below the moving average ribbon, then that would be concerning, and that would cause us to kind of reassess if being bullish here makes sense or not. And again, if you're not familiar with our market trend model, how to use that, how it's actionable, we have a article linked here. It's also on the blog where you can read all about that. Next, moving on to the SPX options market analysis. The reason we do SPX is A, options market are inherently forward-looking. B, that's where a lot of transactions are taking place today. A lot of speculation is happening in the options market as opposed to outright trading stock like they used to back in the old days. And then C, by understanding the SPX options market, which is large, very liquid, we have a good sense of the general market kind of expectations and behavior and speculation patterns. So again, just quickly going through SPXA full complex. Below spot price, this is a call dominant environment. Above spot price, bit of a mixture of call and put dominant environment, which kind of goes to the market trend model, which is in a choppy kind of range right now. And this structure is also being undergoing a transition from bearish to bullish. If you go look at this a couple months ago, this was all red. Now, it's mostly green, so that is constructive to see. Really just what we want to see is we want to see that call speculation continue to come in out of the money, right? Because it's our belief that the out of the money call and put speculation is what drives markets. And then just looking at our delta balance command very quickly. If you're not familiar with this, I know it can be a lot, but simply put, the green line represents the right-hand plane out of the money. The red line represents the left-hand plane or below spot price. Sorry, this right-hand plane is above spot price. And then the blue is the net of that. And so what we are doing is these are the future expectations, and we can simply, again, how I said, options are forward-looking. We're just simply looking at how they're positioned out in time to see if, expectations, structure is getting more bullish, more bearish. You get the point, right? And so what we can see is that these conditions have been improving day over day. We're starting to see that the net of the two is starting to limit to 1, and that's what we want to see. But this oscillator, the max and minimum value are 1 and -1. So in bullish environments, we see our delta balance line pinned at 1. So we do want to see this continue to get at 1 and stay at 1. What would be concerning is if we come back and next week and we start to see these lines trending lower. That means that the structure is getting more bearish over time. Obviously, that's not the case right now, but just wanted to show you what you should be looking for. So right now, getting the SPXP complex. Again, if you don't know the difference between SPXA and SPXP, you can go read that article real quick. In short, though, SPXP, this is your 0DT, your daily, your weekly expirations. And again, above and below spot price, fairly mixed structure between call and put dominated strikes. We can see net slightly put dominated structure, but more or less balanced. Key level, key transition zone 56.85, 56.65. So we're set to open right at the top of the DEX transition zone. We want to see that hold. Then again, same thing, look at our delta balance command. We can see that right-hand plane, left-hand plane have been improving out in the future. We are pinned at 1, so that is constructive to see. From here, we just need to see price cooperate, market trend model start to expand higher as well. And then move into our 0DT complex, fairly balanced structure, kind of run-of-the-mill structure. Things to call out. Sorry, I forgot to put the legend here, but we have the pink is just the implied expected move from the options market. The white is our DEX, our GEX, or gamma transition. Blue is the DEX or delta transition, and then we have our drunken tailor range, which is the orange box. So we're set to open at the top of the DEX transition zone, 56.85. We see the top of the drunken tailor range is 5,700. So all this means to say we want to see price